Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. We're gradually coming to an area of the non-farm payrolls release, so market is preparing for numbers. So the activity here stands in general, well, according to our expectation, we have suggested the market should keep going lower. But currently we come to the point where theoretically, well, everything depends on the numbers. So negative numbers will lead market to bounce here, while the numbers around the expectation, I think, should push it down, and general overall technical picture suggests that it should happen. So by my personal view is that we could see moderate bounces if payrolls will be below the 400,000. Just the easy calculation, if you will see the lack of the jobs in the United States, approximately for 7.5 million, still the pre-pandemic level. You have the Fed time gap till the first rate change is around 18 months. So you could divide one to each other, so you will see that approximately 400,000 should be created per month to return back the employment to pre-pandemic level and right to the moment where interest rates will be changed. Of course, this is just an approximate calculation, just what the Fed is watching for. It means that if we will get 600,000 or even greater, this will be positive result, and the market will start dropping here as well. Numbers below the 400,000 so could trigger the moderate retracement. So currently, guys, not many things depends from us. We have done preliminary steps. We have prepared for downward action, taking the short position in this area in the beginning of the week. Now, not a lot of things that we could do. In general, on daily chart, as we already talked about, we see multiple bearish signs. First of all, acceleration here on the city leg. From the standpoint of the possible hand and shoulders, this is the hand shoulders failure. In fact, because market wasn't show any pullback right from here, and this was collapsed right through the bottom of the right arm where theoretically should be formed. This sooner or later, probably sooner than later, should lead to the taking out of the bottom of the head, because all failures on the hand and shoulders is finished by the drop below the head sooner or later. Oversold level stands very low, 1736, so we have a lot of room to drop more. Second moment, or even third moment already, is that the market has dropped below the previous top. Now it stands in the range. It's former training range. It's abandoned here, trying to stay outside it, return back down, now return again. So for us here, it will be a new trading range around 116, 119 area. So from that standpoint, on the daily chart, I would suggest that downward action looks more probable here. On the 4-time frame chart, we could see gradual rounding downside action. That was, guys, by the way, was the COP target. I will show the same ABCD pattern that on the daily. COP target has been reached, minor pullback, now market is continuing down. So this is reaction on the COP is over. Logical, it suggests market should proceed to the XOP around 1650, 1620 area that we discussed on the daily chart. But as I said, the risk factor here is, of course, the non-farm payrolls. Here you can see market is going around the same top. Mirror standing targets that we have here as well as 1812, 1768. That may be useful for those of you who trade on scalp trading, mainly scalp trading on intraday charts. It's near standing target. I just use the extensions. This retracement, it's maybe butterfly will be formed, something that's one. Maybe butterfly hardly, because we already have the breakout here of this loss. But anyway, that's potential extensions that exist in the market. The few tricky moments that we could get in the last session before the non-farm payrolls, let's take a look on our chart. If you remember, yesterday we trying to catch the minor ABCD retracement for those of you who haven't taken the short position in this consolidation as we suggested in the beginning of the week. And here, by the symmetrical action, yesterday we also talked about symmetry here. It's where symmetrical type of action here is developing. We thought that might be a bit slightly higher pullback here, according to this top But unfortunately, the market wasn't able to break through the minor 30% resistance and just start dropping. Now let's take a look. Market in general is coiling around the same areas. Stands right here. We have the Russian rinse, grabbing the stops below this area, and we have bullish reversal candle. It means that theoretically, maybe minor head and shoulders will be formed, maybe something will be formed, but minor pullback here is possible. I'm not there to suggest that it will be definitely the confidence areas around 1883, 1889. It probably will be too significant. But who knows, maybe we will get it. If not, then probably it will be somewhere to the 30% level around 1875. So here you could consider, for instance, hand and shoulders pattern. Minor hand and shoulders could be formed here with some A, B, C, D retracement back. So we could get something of the same action that we expected here, but right around this current lows. So minor reaction before non-farm proposal might happen on this area. You also could try to use it for taking the short position, but this will be, of course, not as pleasant as here, as you will carry the whole risk of the common non-farm proposal risk, because your loss will be not at the break-even, your loss will be at some different level, probably about the confidence, or maybe at some other levels. Theoretically, guys, by the harmony, you also could consider this head and shoulders pattern that was forming right here, and it works nice. So theoretically, you also could consider here the same head and shoulders, but I think it will be something like the miracle. So hardly we will get the same repeating of the same patterns. The only reason for that might be, as I said, poor non-farm proposals. In this case, indeed, market could jump back to the 90 even area. So, but our short positions already stands at the break-even, so we have, in fact, no risk here, and just could keep an eye and see what will happen on the tomorrow update. These few moments, minor setups patterns, you could use if you're still thinking about taking the position or not, and how to better to do this. So let's keep watching what the price action will get today on your accounts.